Good evening, friends. Actually, I was busy for last 2 or 3 days. That is the reason why I could not bring a new topic for your benefit. But today I have decided to discuss on the next ICDS, that is ICDS 4. ICDS 4 basically relates to recognition of revenue. That means when you should recognize a revenue. Whenever you sell goods or whenever you provide the services, then you get money. Now, as you know, I have already told you method of accounting is cash or accrual basis. Normally we follow the accrual basis of accounting. So as and when the service is provided, we need to recognize the revenue even if the receipt of the money is deferred to a later period. This necessarily means that certain conditions need to be satisfied in order to recognize the revenue. Now, if you go in the normal way, you will find that either we are providing services or we are selling the goods. Otherwise, we have kept our money for growing and we are getting interest, dividend, or you can take you are getting export incentives, subsidies like this. Now all such are income for us and they may be associated or related to our business. Now the question is when to recognize this revenue. When we will recognize the revenue. Now ICDS 4 is very simple. So far as sale of goods are concerned, revenue will be recognized when right, interest, property and risk associated with the goods is transferred from the seller to the buyer. This necessarily means that when there is transfer of significant risk and rewards of ownership to the buyer, then we can recognize the revenue. So this word is very, very important. When you transfer significant risk and reward associated with the goods to the buyer, then we say that revenue need to be recognized. Revenue आपका recognize किया जाएगा. Transfer of risk and reward is very, very important. For example, you are transferring the good, but you are keeping some rights with you. Okay, then you cannot say that all risk and reward are transferred. So it is a measure of identification whether significant risk and reward is transferred or not. If significant risk and reward is transferred, then we can recognize the revenue. हम revenue recognize कर सकते हैं. Now in case of services, when the revenue will be recognized. Now see, as I have already told you in case of construction contracts, since it is a continuous supply of services, it is not that you have started the services and it is instantly completed. So in such cases, when there is a continuous supply of services, the revenue will be recognized on the basis of percentage completion method. So ICDS 4 recognizes only completion of percentage completion method for recognition of revenue. There are two types of method basically. One is complete contract method. That means when the contract is completed, when you execute or when your performance obligation is over, you will recognize the revenue. Else you will go for percentage completion method. ICDS 4 recognizes only percentage completion method. However, if a service is expected to be completed within 90 days, then you can recognize the revenue when the service is provided. So they have given threshold limit of 90 days. अगर 90 दिन के अंदर मेरा सर्विस एग्जीक्यूशन हो जाएगा, कंप्लीट हो जाएगा, डिलीवरी हो जाएगा, परफॉर्मेंस एप्लीकेशन कंप्लीट हो जाएगा, देन आई विल रिकॉग्नाइज द रेवेन्यू आफ्टर द 90 डेज. 90 डेज या फिर 90 डेज के बाद मैं उसको रिकॉग्नाइज कर सकता हूं. ये दूसरी बात हो गया. वैसे ही मैंने आपको बताया था इन केस ऑफ कंस्ट्रक्शन कॉन्ट्रैक्ट्स आल्सो ICDS says you cannot recognize the revenue unless and until 25% of the total work is completed. That means up to 25% there is no need to recognize the revenue, but we will start recognizing the revenue once 25% or more construction is completed. Here again they say कि 90 days के अंदर अगर आपको लगता है कि एक सर्विस एग्जीक्यूट हो जाएगा, कंप्लीट एग्जीक्यूट हो जाएगा, instead of going for percentage completion method, once the project is completed, the through within 90 days, you recognize the revenue. Now the other are basically ICDS IV says with regard to interest, dividend. In case of interest and dividend, interest is recognized over time. For example, I have deposited 1 lakh and it is deposited for 3 months during the particular tax year, then interest will be recognized for the it is deposited for 3 months during a particular tax year, then it will be recognized for 3 months only. However, when the revenue from dividend will be recognized, revenue from the dividend will be recognized when there is reasonable certainty of receipt of the revenue. In this connection, we can go to the Income Tax Act, which specifically says that in case of annual dividend, it will be recognized when it is declared in the annual general meeting. That means when the company convenes the annual general meeting, and in the annual general meeting, the company declares the dividend, then your right to receive the dividend arises and you can recognize the revenue. You have to recognize the revenue. Okay. Now, in case of interim dividend, the revenue will be recognized because interim dividend is declared anytime by the board of directors in between the year. Suppose company has some profit and company decides to distribute the profit among the shareholders. This is known as the interim dividend, and Act says that interim dividend will be recognized as and when it is unconditionally made available among the shareholders. जब ये unconditionally shareholders के बीच में available कर दिया जाएगा तब उसको recognize किया जाएगा. This is very very important in case of dividend and your interest. Now they say about export incentives. Export incentives will be recognized when there is reasonable certainty of the collection. जब आपका reasonable certainty आ जाएगा collection में, there should not be any ambiguity, there should not be any uncertainty regarding the receipt of the money. So whenever there is reasonable certainty, more than 70-80% chances of receipt of the money or 100% chances of the receipt of the money, when suppose government says that yes, it will be paid and all paper documents have been done, then you can recognize the revenue in case of basically export incentives. Now, whether it is applicable to insurance companies, it is basically not applicable to insurance companies. Now, let me go to some questions and answers with regard to ICDS IV. Otherwise, basic concepts are over. My first question is, hear it carefully, whether we will maintain books of accounts as per ICDS IV. The answer is very simple. You will maintain the books of account as per the accounting standards or Ind AS or as per the generally accepted accounting principles. You need not maintain the books of accounts as per the ICDS IV. However, if there is a difference between the gap you have followed, that means generally accepted accounting principles you have followed, and the provision given in ICDS IV, then you have to make necessary adjustments, and such adjustments should be disclosed in Form 3CD, that is Tax Audit Report. So, thing is very clear. There is no need to maintain books of account as per ICDS IV. You should maintain the books of account as per the generally accepted accounting principles. Here, I will again recall you one thing. You are following the methods of accounting as per the accounting principles for the benefit of the stakeholders. So when I say the stakeholders, your ultimate objective is to recognize the revenue properly so that you will not give a colorful result of your company for attracting maybe investors, for attracting bankers, for attracting suppliers. So you should recognize all possible losses, but you should not recognize gain unless and until it is realized. It is as per the accounting. But as per the income tax, the ultimate objective is to find out the income so that a reasonable tax amount can be collected by the government. So there is one thing, whether I will make a provision for loss as per ICDS 4. ICDS 4 says that you cannot make a provision for loss unless and until it is realized or it is ultimate certain that the loss will incur. But as per accounting, okay, provision, conservative provision, okay, will be applied, and whenever there is a chance of loss, then the loss should be recognized. A provision for the losses or provision for the expenses should be made on the basis of accounting standard 29. AS 29 के हिसाब से आप provision बनाओगे. That is, there must be an obligatory event, past event and present obligation. Okay, there must be probable cash outflow, accounting estimation is possible. If all these conditions are satisfied, then you will make a provision. But provisioning is not there in income tax. Why? Because people will make more and more provisions so that their profit will be reduced and they will not pay the taxes. So here the objective is to find out the income, to find out appropriate amount of tax as per Income Tax Act. But there the objective is to protect the interest of the stakeholders so that the investors, bankers and other stakeholders will not suffer due to the colorful financial statements prepared by the company. So this we should always keep in our mind. Again I am repeating here, method of accounting का मतलब है कि what method of accounting we will follow, cash or mercantile basis. But while preparing the financial statement, we will not take into consideration ICDS 4. Preparation of financial statements should be made as per the generally accepted accounting principles of India for the protection of the interest of the stakeholders. But if there is a different view as per ICDS, then necessary adjustments should be made via what? Your tax audit report, that is 3CD. Next is, how is revenue recognized for service transaction under ICDS 4? As I said, you will recognize revenue under the percentage completion method. अगर 90 days के अंदर ये complete हो रहा है, you can go for full completion method. Okay. Unlike some accounting standards, ICDS 4 does not allow the completed contract method. It does not allow completed contract method. It allows percentage completion method. Now, whether ICDS 4 is applicable to real estate development? See, as I have already told, there is ICDS 3 relating to construction contract. So, construction contract and ICDS 3 is applicable as and when it will be applied for construction contract in case of real estate transactions. Otherwise, there is no problem in applying ICDS 4 for other real estate transactions. Then the question is, if there is a conflict between ICDS 4 and Income Tax Act or Income Tax Rule, it is the Income Tax Act or Income Tax Rule that will prevail and not the ICDS. Okay, so Act and Rule supersedes this ICDS. Now, if MAT will be applied, for example, if you have no profit due to unobserved depreciation, due to carry forward of losses, then you have to pay MAT, minimum alternate tax. Whatever profit you have made in the current year, on that profit you will pay a minimum alternate tax. So when minimum alternate tax will be applied, there will be no application of ICDS. Now, what are the mandatory requirements as per the ICDS 4? The mandatory requirements are very simple. You must recognize revenue from the sale of goods. You must recognize revenue from the sale of or supply of the services under the percentage completion. You must show the percentage completion method that you have applied for recognition of revenue in case of service contracts. Okay, all these should be disclosed in the tax audit report, that is Form 3CD. Now, who is exempted from ICDS 4? Suppose you are not coming under the purview of tax audit. We will go to the tax audit subsequently. Suppose you are not coming under the purview of tax audit, you are not liable to what? ICDS. For example, individuals and HUFs who are not coming under the purview of tax audit, they need not follow ICDS. But companies need to follow the ICDS. Similarly, suppose you are coming under 44AD, 44ADA, 44BB, for example, presumptive income you have taken for calculating your income, then ICDS is not applicable to you. Okay, I think I have given a detailed knowledge on ICDS, but again I am repeating briefly. ICDS talks about how to recognize revenue in case of sale of goods. In case of sale of goods, revenue will be recognized when risk and reward, substantial risk and reward are transferred from the seller to the buyer. In case of services, you will recognize revenue on the basis of percentage completion method. In case of interest, recognize revenue over the period for which the investment is made. In case of dividend, revenue will be recognized when there is, that means revenue is declared in the annual general meeting, or in case of interim dividend, when it is made unconditionally available among the shareholders. In case of export incentives or like these royalties and all these things, when there is reasonable certainty that the amount is received, amount will be received, you will recognize the revenue. Okay. Now, maintenance of books of account need not be made as per the ICDS IV. You will maintain it as per the generally accepted accounting principles. But if there is a difference between ICDS and the generally accepted accounting principles, necessary adjustments should be suggested in Form 3CD, that is tax audit report. ICDS is not applicable when MAT is applied. The minimum alternative tax provision will be applied. ICDS need not be applied. Similarly, if you are following presumptive income for calculating your profit, ICDS will not be applied. Similarly, if you are an individual or HUF, and that is very, very important, you are not coming under the purview of tax audit, then ICDS is not applicable to you. Okay, this is all about ICDS IV. But here briefly I will say that if you go to the Ind AS 115 relating to recognition of revenue, there are 5-step model for recognition of revenue under Ind AS. It is again equally applicable here because the provisions are quite clear. But if there is a difference with ICDS, then it should be properly disclosed and the differential amount should be recognized as per the tax audit report. The 5-step model are very, very important that you should always remember. One, there must be a contract between seller and buyer. Second, there must be a performance obligation. That means the seller should have a performance obligation to be committed, okay, in lieu of the contract for sale or supply of the services. Third is there must be a financial transaction or transaction price with regard to the contract. When there is no transaction price, there will not be any recognition of revenue. Okay. Third. Fourth, the transaction price must be related to the performance obligations. Performance obligations के साथ उसका relation होना बहुत ही जरूरी है. Okay. And when the performance obligation is justified or completed, then the revenue will be recognized. Recognize revenue when the entity satisfy a performance obligation. When satisfy a performance obligation, that means whenever there is continuity of supply of services. जब continuity of supply of services होगा, when the particular service obligation complete होगा, you will recognize the revenue under percentage completion method. This is the basics of the Ind AS 115 for recognition of revenue. Here I am not going to Ind AS 115 because my objective is to teach you relating to ICDS IV. I think you must have understood. If you need some case laws and problems associated with Ind AS 115 or ICDS IV, you may WhatsApp me to my WhatsApp number 94374333425. I will provide you. Okay, and follow my WhatsApp channel SB DASH-SAFAR for getting latest update in the field of accounts, economics, commerce, finance, taxation. Okay, for getting updated knowledge. Thank you for your patience hearing. I will prefer for a better topic in the next session. Thank you, friends.